The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the May 1st terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everybody out there had a great day yesterday. It is terrific Thursday, and you know, the best way to start our day, it's always to have clear outcomes. That's why each morning I'll let you know that my outcome is to teach you how to master the tools for trading. That includes the tools of the mind. You see, trading and investing, much like life, it's all about strategy. And for the next couple of hours, we'll take a look at the A to B equals CD patterns. We'll look at Gartley buy and sell patterns. We'll use these tactics and many others to project price because every game plan needs tactics. But here's the thing. Tactics without strategy, that's a recipe for failure, and failure is not an option. It's not an option in my playbook. I hope it is not an option in your playbook as well. Instead, you and I will think like strategists, because as strategists, folks, we will slay the tacticians all day long. The foundation of a strategy, though, you've got to have a strong mind. So let's begin by taking a look at one of our tools to achieve that specific outcome. It's what I call developing your craft. You know, when developing your craft, effective leadership must consistently be developed, must be nurtured. After all, you and I, we must become the great leaders of ourselves if we're going to trade these markets. Most of us are one-man and one-woman armies out there. So developing our craft, well, that's something that takes constant study. I wish to always say, you know, thank you for allowing me to develop my craft, for providing me the opportunity to share my craft with you each day. 2 hours a day. It's a beautiful thing. It's a way for me to continue to work on my craft. And let me share with you what I believe are the 5 ingredients that each of us need in order to develop and perfect our craft out there. And the areas that we need to pay special attention to, well, for example, area number 1. This area is the area of possibility. You and I, we must play the what-if game. What if I had this, or what if I had that, or what if the market's going to do this, or what if the market's going to do that? In essence, we're using the most powerful nation on the planet when you and I do that. Yeah, we're using a nation. It's called our imagination. It's where dreams are born. Area number 2 that we've got to focus on, the study of opportunity. Sometimes opportunity is closer than we think. The question is this: are you one to take advantage of opportunities when the universe presents them to you? Have you taken advantage of the opportunity to learn about the Rhodes momentum indicator and strategy out there? Could very easily be the one thing that'll open up your floodgates. Most certainly has for me. The area of study number 3, the area that we've got to pay special attention to, it's the study of ability. We must be a good student of our abilities. That means we really got to take a look and see where we're at. We must take and make continuous investments in ourselves. We've got to be able to always be willing to improve ourselves. Always feed your mind each and every day. Area number 4, the area of inevitability. Ask yourself the following. If I keep on my current daily practices, where will they lead me in a year, in 5 years, in 10, in 20 years? In other words, if I do the same things, do I really expect different results? Something to think about. And finally, area number 5. What is that area out in Vegas? Anyway, area number 5, the study of rationality. You see, when we are rational, when you and I, when we're rational, we'll come to the right conclusion. For me, that means put things down on paper, especially if you're trying to solve a problem. And, of course, go out there, get other voices, get other ideas, because if you could have solved your problem, you would have already done it. Folks, if we pay attention to these areas, they will lead us to greater riches, and we will develop our craft. It is terrific Thursday. This is TFNN, Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Let's get things kicked off by taking a look at the futures market out here right now. Gold is in the futures market. It's down $17, off 1 3/10%. In silver's case, down 1 3/10%. It's off 26 cents right now. It's trading out at 18.19. Light sweet crude is off 60 cents. It's trading out at 99.14. Relatively market in the index futures out here. The Dow is off 6 points. S&P down 75 cents. NASDAQ futures up 6. Russell 2000 virtually unchanged out there. So let's go take a look at gold and silver. Let's start off with high-ho silver out here. Right now, silver trading out at 18.91. As we've pointed out here, we took a look at it really in kind of great detail yesterday. That 0.786 Gartley buy pattern that happened to be forming right at the top of that June 28th swing point high out there, which was at $19 and about 63 cents. 1957 was the actual low that formed that Gartley buy pattern. And boy, when these Gartley buy patterns fail, well, we're getting that one outcome that you're going to get, which is that 100% move of a move. That's what's already taken place here this morning. That's the swing point low from December 31st. Now, in one extent, we've been waiting for that December 31st swing point to get tested. The question is it going to get rejected? And that's really the key out here. Because should we see it close today below 1872, well, that's where we start to get into that Gartley pattern turning into a butterfly. What do I mean by that? Well, if we take our first X marks the spot, the beginning point, to identify that Gartley pattern. Oh, I didn't mean to draw that. I meant to grab a different tool out here. If we take a look at our Fibonacci expansion numbers, if we go from the low from December 31st all the way to the high that's put up here on February 24th, now let me go ahead and scrunch the chart. You'll see that if, in fact, this area fails, 1872, I don't know if it's going to fail or not, but if it does, that says 1777 is a very likely outcome, at least to push down into that area lower. Now, what will 1777 do for us? It'll get all the way back down and below the June 28th area. That would go ahead and spike that low out there. So what you're waiting on right now, really a couple things. You're waiting for a reversal signal. Could you buy here? Yeah, you could. You would just make sure that you have a very tight stop in place. And you have to also realize that we've got patterns out here that are saying, you know what, I want to go lower. However, let's not overlook the fact, as we take a look at this daily chart out here, that what silver has also done, silver's gotten down to what? Gotten down to the oversold level of our daily relative strength indicator out here. So right now it's down at about the 30.49 level. That's where you start to get into oversold condition. When was the last time that silver has got down to that level? It was back in December 2013 out here. Obviously there was a lower low that was formed on December 31st with what? With less relative weakness. That was a nice little sign out there. It certainly was a nice sign when you got that bullish engulfing candle on January 2nd out there. We do not have that in place here as we speak right now. If we go take a look at a intraday chart, I think I've got a 30-minute chart up on my screen out here. What we will see, I think I need to refresh this here. Let me do that. Refresh. I should get rid of a couple things out here. There should be a spike down to what already was on a intraday chart. Come on. Come on, baby. Do it for me. Come on. Oh, it's always during a live show. You gotta love it. There we go. Okay. Now, if we take a look, here's the 30-minute chart out here. Forget the squiggly lines at the bottom of my screen out here. If we take a look at the swing point from 7:30 in the morning, this is April the 24th. The low out there was $18.93. If I go from that low, let me do that right now. Let me just grab this tool out here. So if I go from that low all the way to the high that was put out here at the trading session, again, it's a 30-minute chart we're looking at, 10 o'clock in the morning. This is on April the 24th. That was out at 1991. What we'll see is the 1.272 expansion basically has been hit. 1866 was the number this morning. We saw silver get down to $18.68. So it's made an expansion of swing points that way. It's one of the reasons why silver may have stopped where it was at. Also, you got the rubber band that was expanding, and the rubber band can only expand so far before it needs to snap back. So we'll pay attention to that. We'll probably get a pretty decent feel for it within the next hour and a half of trading. Let's go take a look at Goldilocks. Let's go see what gold is doing right now. Again, trading off about $16 and change. It is not trading into a swing point here just yet. Where's gold contract out here? Well, I guess I can't completely say that. Let's pay attention to where it is trading into, which is really key for us today. The real key is going to be, again, the swing point low from April 1st out here. And that price point is $12.7740. So far this morning, we've seen a price spike down to about $12.7730. You got to love it. So right now, the question is, we've seen a rejection of this swing point once. So $12.7740, that's the number. That's the low of April 1st. We saw rejection of that swing point out here. You had the bull step in. That was on April the 24th, when price spiked down all the way to $12.6840. So we might see a test of that area, $12.6840 again. Maybe we see the bulls rush in. We'll see when we go take a look at the 30-minute chart out here. I think it's a 30-minute chart on my screen. We'll see where the bulls, in fact, did rush in. But the key level, $12.7740. Get it close below that today. Says that Goldilocks wants to move down to about the $12.16 area. You can see that trend line again continues to act as a resistance zone. Just take your gold contract out. Go take a look at the highs from March the 17th. Use that high, which, by the way, is 1392.16. Go ahead and use the high from April the 14th out at 1331.40. That becomes a pretty good resistance line. You break through that, and then that may be the long signal and trade out there. If we take a look at the very intraday chart out here, see what happened on a 30-minute basis. We had gold spike down, and this is in the process of forming a 0.786 Gartley buy pattern out here. The 0.786 retracement level is 1276.30. We've seen this little in this last 30-minute session here coming into the 9:30 time frame. We've seen a spike down to 1277.30, $1 away. Just because that is the 0.786 area, that does not mean that necessarily has to hold out here. We have not seen the bulls rush in. Now, where is it that the bulls rushed in? Back here on the trading session of April the 24th out there. Take a look at that wide-ranging bar. Big old wide-ranging bar during the 10 o'clock session out here. That should become support if that area gets tested. That low out there is 1288. A lot of movement in the metals out here. We get back. Let's go take a look at some of the monthly charts for the futures contracts. Let's go see if there's any bearish or bullish signals out there. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Sorry, I was just kind of multitasking out there. Shouldn't be multitasking when we come back on the air. I was just asking some folks in the den if they knew why Sallie Mae, SLM is the ticker symbol on it, why it is trading down so much here this morning. Didn't know if there was something. It closed at 25.75. It's trading out at, looks like 9.55 right now. Yeah, pretty wild out there. Vodafone, VOD is the ticker symbol. It closed, they're putting in the S&P. Yeah, well, that's not why it should be trading down like that. Vodafone, VOD is the ticker symbol. It closed at 37.96. It's trading at 36.91. Apollo Commercial Real Estate, ARI is a ticker symbol. They close at 17.1. They're trading at 16.38. So not a ton to the downside out here other than Sallie Mae. To the upside here, Yelp closed at 58.32. This is dollar-wise here. As far as to the upside or downside. It closed at 58.32 right now, trade out at 63.50. DirecTV, DTV is a ticker symbol. They're trading at $81. It closed at 77.60. I know they're working on some deals out there. Merrimack Pharmaceuticals, Mack Truck, MACK, is the ticker symbol. That's probably the biggest percentage mover out here. Must be out with some pharmaceutical report out here. I don't see what that is, but they closed at 4.39. They're trading at 7.70. So the big move there. MasterCard, that's up this morning here, up a couple of dollars. It closes at 73.55. Facebook's up a bit this morning. It closed at 59.78. It's trading out at $60.48 out here. Let's take a look at the monthly charts for the next couple of minutes out here. Let's go take a look at the futures contracts. We have begun May 1st out here, so happy May Day. Most of the markets overseas are closed out there, so one of the reasons for us not to really focus too much on that. If we take a look at our markets in the month of May, if we look at the ES Mini as an example here, the ES Mini, which has been the strong index, the Dow, which is a strong index, the New York Stock Exchange, whether it's the futures contracts, the cash contracts, whatever it is that you're looking at, they had every opportunity to give us a reversal signal this month. I mean, absolutely every opportunity. Twice during the month of April, they had the opportunity to do that. No bearish candle formed at all on the ES Mini. Nothing but long and strong on the ES Mini, even though we are in the so-called, we began at the close yesterday, the 6-month unfavorable seasonal cycle out there. I did a free special report last year, I believe it was, around this time frame. I'll have to go dig that out, and maybe we can get that back up on the website out there. Don't know that it really needs updating too much. In any event, let's take a look here at the NASDAQ. Let's take a look at the NQ. It's a continuous contract that I'm punching up onto my screen out here. You're seeing the Rhodes momentum indicators out here. Last month, so we do not have a bearish reversal signal, even though that's a monthly chart. Remember, we're looking at the monthly time frame out here. So if you're a long-term trader, if you were indexed somehow to the NASDAQ, the NDX 100, the composite, what have you, you're in pretty good shape out here. Last month's candle turns out to be a high wave candle, similar to a doji, although quite frankly irrelevant when it comes to using it for any kind of resistance or any kind of support. You really can't use dojis as support candles. You can use them as resistance out here, and so it just means that the market is confused. Well, we know that it was a lot of tug and war that was going on inside of the NQ. So on the monthly chart out here, still nice and bullish as we finished out the month of April. If we go take a look at the Dow futures, let's go see what that gave us as a signal out here. And it's going to be very similar to what we looked at in the S&P 500, in the ES Mini. In this case here, it had every opportunity to go ahead and give us a key reversal session out here, and it didn't. So the Dow is still absolutely long and strong out here. Buyers are in control of this market, not sellers. It's trying to the high out here. We've got from December 213, December 31st. What was that? 16,540 in the futures contract. We're trading at 16,495 right now. So far this month, the high 16.5, or last month 16.574 out there. So everything looks pretty good here for the Dow. Let's go take a look at the Russell 2000. Now remember, I've got about a 10-minute delay on the feed for this, so it's going to be off slightly. And here, quite frankly, is where we've got the weakest of them all. And on the monthly chart out here, as we take a look at the Russell 2000, high wave candle formed last month, not last month, meaning April, in March, I should say. And we had a move lower out here. Now, what it did not do, let me see if it did this or not. Body of this candle from the month of February, the open was 1126.10. You're trading at 11. You're just trading just slightly below it right now. Here's the fact. On the monthly chart, the trend is still up when we take a look at the Russell 2000. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 22 points. Trading out at 16,559. S&P off 1, trading at 1882. Composite down 1, 2 points, trading out at 4112. Russell 2000, the weak link in the chain, off about 4 points right now, trading out at 1122. Apple up 28 cents. Microsoft down 18 pennies. Google off 68 cents. Leading the charge, the upside, we've got Netflix. Netflix trading out at $326.94, up about 1.5%, up about $5. Yelp up $4. That's trading up a little over 6%. Catamaran, CTRX, that just jumped in the lead, up $4.64. It's all right. We got the Kentucky Derby coming up this Saturday. Run for the Roses out there. We've got the Catamaran Corp. It's up 12%, up $4.55. DirecTV up $4. Gentherm THRM is the ticker symbol, up 11% this morning. That's up about $4. Weight Watchers adding some weight this morning, up 17%, up $3.47. Proofpoint, PFPT is a ticker symbol, up 12%. MAC up 63%. That's Merrimack Pharmaceuticals. GW Pharmaceuticals up 4% here. MasterCard up 5%. To the downside, American Railcar Industries, ARII, down 12%, off $8 and change. Western Digital, the hard drive manufacturer out there, they're off $4.50. Cardinal Health, CAH, down $4, down about 6%. Generic Holdings, the maker of the power supplies out there, down about 6%. Ocwen Financial, OCN, off 8%, down $3 and change. Clorox Company, CLX, getting bleached this morning, down about $2.20, off 2.5% out there. Marathon Petroleum, MPC, down 2.5%. Ooh, Emulex Corp. You don't want to emulate this. ELX is a ticker symbol. They're down 27% here, off $5 and change. They reported revenues of $109 million versus $116 from the prior year. But boy, they got some expenses going on here. $7.2 million loss versus a $7 million profit in the prior year is what it looks like to me. Now, we were taking a look at the monthly charts, so let's go from one extreme to the other extreme, right? We'll take a look at charts out here. We're primarily focused on daily, weekly, monthly, and then intraday charts. So let's go take a look at the intraday charts here, the 120-minute time frame charts, and let's start off by taking a look at Let's look at the NASDAQ. Let's take a look at the NQ out here. We know on the monthly chart out there, it did not show really any signs of any real damage. Now, inside the NASDAQ, clearly on the 120-minute chart, and again, because we're using co-located opens and closes of bodies of candles out here, just to put this in perspective, your trend lines, your channel lines, your trend lines, but your channel lines are going to be different because we're using the real essence of price, the body of a candle out here. Nonetheless, if we take a look at the move down, that's signaled by red channel lines to the downside. This is the NASDAQ. This is the current June contract. This is a 120-minute chart that we are looking at out here. You can clearly see that what the NASDAQ did what it was supposed to do, quite frankly, meaning price moved from the bottom of the channel, that little spike down here at 2 o'clock in the afternoon, that was on April 15th, moves all the way back up to the top of the downtrend channel. Okay, that's the red line. And it does that at 12 noon on April 21st. Breaks through that. Now, as it breaks through that, we really didn't have this rising price channel. Those are the black lines that you see on my screen. When I say it really did what it was supposed to do here is when you see price break a price channel, a trend line, what you like to see is you like to see the equity come back and test it and prove to us that, in fact, it wants to move higher. Well, what, in fact, did the NASDAQ do as it was making that one move lower at 2 o'clock in the afternoon on April 28th? It came back and it tested the downtrend channel line. And it rejected it. Not just rejected it. It rejected it with what? Nice big old bullish engulfing candle. That was the session going into the 4 o'clock time frame. That was on April 28th out here. So now what it has established, clearly, is a new rising price channel. Quite frankly, until the bottom of this gets broken out, what you should expect is we should expect to see prices continue to move higher. Now, on the 120-minute time frame, the NASDAQ is neither overbought nor oversold, so it's more towards the overbought range, but it's not overbought. It's got the opportunity to continue to run higher, but this is on a 120-minute time frame. It has broken its downtrend, period. No ifs, ands, or buts about it. So that's what's going on. If we take a look at patterns out here, if we take a look at retracements from the low, from that spike down here at 2 o'clock in the afternoon on April 15th to the high that was most recently that we've seen here on this move, that's the high on April 24th out here at 36.18. You'll see a nice 0.618 retracement. Now, when you make a 0.618 retracement of a move, what does that typically set up as an opportunity? What's the opportunity? What's the opportunity the universe is presenting to the market out here? Yes. You pegged it right. I heard somebody screaming out there, A to B equals C to up. Well, that's exactly right. If we take a look at that pattern out here, if we come take a look at the low on April 15th, that becomes our A point. That's 3404.75 here, and we use the high that took place at 10 o'clock in the morning, April 24th, out at 36.18. And then we take a look at that 0.618 retracement of that level. That's 2 o'clock in the afternoon, April 21st. A 1-to-1 A to B equals CD takes the NASDAQ futures, the 120-minute chart, up to about the 36.94 level. What's up at 36.94? Well, at 36.94, you get up into the swing points here on April the 3rd. Let me pull this back. Oh, I didn't mean to do that. Let me see what happens here. I thought I had unhinged that. Let me go draw that A to B equals CD again so I can have that in here in case for any of you that are following along with me at home. So there's our A to B equals CD. Now I want to pull this back here. 35.94. Now, this is kind of interesting. I think it's interesting. Let's go take a look from the highs out here on March the 6th, right around the 37.26 level, down to the low that was put in here at April the 15th, and that's about the 0.786 retracement level. It's actually a bit higher than that. 36.57 is your 0.786 retracement level. So what's the key here? The key here is going to be the NASDAQ getting above its swing point from 10 o'clock in the morning. That was on April the 24th out there, 36.18.25. That's going to be the number to watch. That's the number to watch on the upside. To the downside, it would be what happens if, in fact, price is able to break the new rising price channel. This is from one of the weak areas, right? So we took a look at the longer-term time frame. We took a look at the monthly. Now what we've done is we've backed it down all the way to the other end by taking a look at the 120-minute chart out here. 120-minute chart shows the trend has been broken and has been broken from the downside. Now it's switched to an upside move out here. And that's what's going on that 120-minute time frame chart. If we take a look at the Weak link out here. Here's Russell 2000. It still is in this downtrend price channel out here, so it has not broken through that area. It probably needs to get above, I'd have to say, probably this little swing out here from 11:30 in the morning on April 28th. A close above 1129.80, and it will then have broken its descending price channel. But it has not done that as of yet. And that is the weak link. So from weakness, you want to find out what's going on out there, and we'll be paying attention to that for sure. I think that you should. If we take a look at the S&P futures contract, remember we took a look at the monthly had every opportunity to give us a potential reversal signal with a key reversal session. We have a clear rising price channel that's in place here right now inside of the 120-minute chart for the ES Mini, not until it would break its lows out here. And the last time down at where we saw that real nice bullish engulfing candle that had formed here, also going to that close, that 4 o'clock close on April the 28th out here. So if we take a look at retracements, just to get an idea for weakness or strength compared to the NASDAQ, if you come down to its swing point low on April 13th out at 1803.25 up to the high that was put in here at 10 o'clock in the morning on April 24th, you'll see just below really a 0.382 retracement. So you've got some real nice strength here inside of the S&P 500. I suspect what we will see is a move up to at least test the top of the rising price channel out there. Of course, this too could also have an A to B equals CD pattern out here. That A to B equals CD pattern, that would give you a price projection here. Let's pull this down. I'd say right around 1923. At 1923.30 out here, that'll take us into new all-time highs out there. And I think that is a very, 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 very real potential out here inside of the market. What do we expect today? You know, the ES Mini, one of the strong indices out here, strong futures contract. It's not completely in an overbought condition, but it could move sideways to higher out here. So right now you see a nice little rising price channel. Hey, if the price gets broken to the downside, that changes our view. But this is where we're using tactics, right? We're using tactics to take a look at rising price channels, A to B equals CD patterns. All that we can do is use the information that's available to us right now. All we can do is really be willing to take a look at the information, shake off whatever viewpoint we have of the markets, come back and take a look at what the stock charts are telling us, and always be paying attention to what's coming, what the strength is telling us and what the weakness is communicating to us as well, at least with regard to harmonic pattern recognition out here, and that's really what is we're doing. If we go take a look at the Dow, let's go see what we have going on here in the Dow. Now, you can see the Dow. Let me go ahead and we'll clear off a number of things out here. Well, we'll clear off a few things. Here's your A to B equals CD down inside the Dow when it was in its downtrend channel. Of course, it broke through that. Back here, let me get rid of this retracement. Let me get rid of this here, make it a little bit easier. So if we take a look at the Dow itself broke through its descending price channel at about on April 15th, right around 4 o'clock, 5 o'clock in the afternoon out here. Now, the Dow itself could also be making A to B equals CD to the upside. Let me go ahead and clean this off, too, since it's not really active at the moment. And let's take a nice little hammer candle also that the Dow formed as it made its low. That was at 8 o'clock in the evening on April the 13th. So if we take a look at the potential A to B equals CD pattern to the upside that the Dow has in place right now, that pattern here looks like this. Right now it's trying to take on its swing point. Already did. How about that? Let's look at strength. Swing point was 8 in the morning on April the 24th. There were 8,700 contracts there. Got through it with 52,000 contracts going into the close on April 30th. So now the Dow actually has a confirmed A to B equals CD to the upside, and confirming it again here this morning during this bar here that closes at about 15 minutes from now. As long as it closes above 16,513, you're at 16,530 right now, says that what the Dow wants to do is move up to about 16,877, and if it can do it with some gusto, it started moving here, I could make a case of 17,000 out here, but it has clearly broken its descending price channel, and so the next pattern that it has in store for right now is the rising, is the A to B equals CD pattern. If we take a look at, let's go ahead and do this here. Let's go ahead and try to put a rising price channel in place as well. So let's do that. It probably looks like about this. It probably looks like, let's see here, let's try to find some, probably right in about right here would be the range, right around in that area where I would draw it. And if we take a look at that, How about that? The top of the rising price channel kind of coordinates with the time frame here of about when is that, May 7th or so. So remember the sell in May. Just to kind of put things in perspective, we can go back and we can take a look at it. The sell in May does not mean that it has to begin on May 1st out there. And I don't suspect that that's what we're going to see take place here this time. At least at this stage, that's what the charts here are signaling to me. And that's on the long-term charts, and that's on the ultra short-term charts as well. In any event, that's enough of that. Let's go take a look at some of these stocks here that are popping and dropping. And let's start here with some stocks moving to the upside. Let's take a look at some things we have not looked at before. Let's take a look at Kirby Corp. KEX is the ticker symbol, KEX. Let's go see what it is doing out here. Moving up above some swing points. Looks like this may be at some pretty decent. That looks like it could be at all-time highs out here. So right now, we'll go put this on a weekly chart. Right now, what we've got is the swing point from March 7th. Volume 294,000 shares out here. Looks like that is the B point of a small A to B equals C to the upside. Already 127,000 shares today with nice wide price spread, accelerating volume. That says at a minimum here, the small A to B equals CD pattern that it is forming and completing. It's going to take price to the 110.11 area. I would have to say no, not so fast. More likely 113.88 would be a decent price target for this. Now let's put this on a longer-term time frame. KEX Corp, by the way, Kirby Corp, we'll see what they actually do. It'll populate on my screen here in a brief moment, and I'll tell you what they actually do. But we can see here by looking at the weekly chart, this is a all-time high, so everybody in this stock is at the party, having a pretty good time. On the weekly chart, the A to B equals CD pattern. The 1 to 1.272 is what it's hit today, but take a look at how strong this leg here is on the C to D move. That's coming off the lows here, June 29th. So that's going to go up to its next level. Now, Kirby Corp, they provide marine transportation diesel engine services in the U.S. So looks like Kirby Corp wants to try to make a run for about the 125 area, and that is on its weekly chart. Let's take a look at Catamaran Corp, CTRX. Speaking of marine stuff, let's just stay with the marine theme out here, although this stock does not look anywhere near as good as Kirby Corp. Let's go ahead and erase everything on the screen out here. So you got a Catamaran here gapping up. Let me see if they were out with a number, see if that's what's behind the move out here, see what their numbers look like. Net income $63 million versus $51, so they're still growing their bottom line. I don't recall if they're in the IBD or not any longer, but you know what? Boy, they're certainly growing their top line numbers. $4.9 billion versus $3.1. Man, that's pretty good. That's like really good. What is that? That's like over a 30% increase in the quarter. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Totally flat market out here. Dow's down 35 cents. S&P's off 88 cents. Composites down 32 cents. Flat except for the Russell 2000. She is down $8 right now. Let's go back and take a look at Catamaran. Now, Catamaran Corp, they're in the pharmacy benefit management system. I know at one time this was one of the high flyers on the in the IBD 30 out here, I believe, because of this. You can see this is the weekly chart that we're looking at. I'll go put the daily chart back up on my screen here. But remember, whenever you're trading anything, you want to make sure that you're taking a look at what's going on at least one level up above you. So if you're trading based on the daily information, make sure you understand what's going on in the weekly chart, as well as what's going on underneath you, 120-minute chart, 30-minute chart, 240, something like that out there. And I prefer that you stay away from 60-minute charts, because if you're using volume at all to benchmark things, you don't have and you're using hourly charts, and you take a look at a stock, well, you don't have 7 equal hours out there. So, use 30-minute charts. Use something where you can break up the trading session out there if you're going to be using volume. Now, inside of Catamaran Corp, while we were away, if you were to take a look at page 222 in H.M. Gartley's book, he would tell you that what you want to do is you want to buy the first A to B equals CD down pattern. You want to buy the first A to B equals CD down pattern, in a move that is moving higher that you did not get in on. And we actually, textbook-wise, we actually have that first A to B equals CD pattern that is formed here, and it completed the week of April the 11th. Now, we've got, this has got some problems, no question about it, but it's also got some friends. It's got some friends and family out here, and I'm going to show you what I mean by that. So when we take a look at Catamaran Corp, it's a weekly chart. The A point of the A to B equals CD, that begins August the 9th out here, week of August 9th. Price level is $58.73. Makes a B point, makes a low on December 13th, gets out at $43.49. Makes a retracement, looks like about 0.618. I'm not going to measure it here just yet. February 28th, week of February 28th, gets up to $52.98. 1-to-1, the 1-to-1 projection takes you to $37.72. Now, on the week of April 11th, It got down to 37.87. Gotta love it. Now what it did on a weekly basis, it just simply moved sideways here. Now I don't know whether it was oversold or not. I mean, I can put that up here real quickly. Let's see. Yeah, it moved down right into the nice oversold level of the relative strength indicator. So to work its way off, it just simply moved sideways. Two very small candles out here. Two very small-bodied candles. But look at this month's candle here. This week's candle is really what I should be saying, not this month. Look at this reversal that we have out here. Also, look where price came down to in Catamaran, this high volume breakout session. So this, in essence, came back to a breakout session. It did, which was a low of April 20th out at 38.76, completes an A to B equals CD to the downside. You're now getting a nice big bullish reversal signal out here. It's the same kind of reversal signal that we saw inside the markets back in 2009. You know, I'm a big study of and a big fan, certainly, of Japanese candlestick charting, but you've got to use them the right way. And what I noticed is this is really what's also referred to as a three-morning reversal pattern out here. And what I realized was that typically it's because those candles form over 3 trading sessions. I recognize that they can take place over more than 3 trading sessions. In fact, if it does take place over more than 3 trading sessions, it's actually a very strong move out here. If we take a look at, we use one of our other features out here. If we take a look at the Chapman wave count on the way down here, you'll see that what this did was it got to the actual here this week. It's 5th wave on the way down. So what is that, wave E out there? So we've and now price just made bounce up to the top of the descending price channel. I suspect that that's what it will at least do, but maybe it's going to make an even larger move. And why do I say that? I got to do this quickly, don't I? If we go take a look at the Dow here, let me see if I can pull this back. Here's that pattern. Let me take you back to March of 2009 out here. Boy, do I have to do that quickly. March 2009. Come on, here we go. And I blow that pattern up on the screen out here. Take a look at these 4 candles. Same thing that we just saw, or we're looking at right now when we take a look at Catamaran. Folks, it is Terrific Thursday. Thanks so much for joining me. Have a great day. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.